Nigeria was in a recession and facing pressures from crude oil price and production challenges, foreign currency price and liquidity squeeze, high inflationary rates, socio-political agitation, and so on. At the time, I opined that with increased clarity in monetary and fiscal policy direction offered a path to stability and recovery. It is undoubtedly a testament to the viability and resilience of the Nigerian economy, people, and policymakers, as well as the vision and tenacity of our economic managers and policymakers, that the economy exited recession in the first half of this year. Inflation is on a positive directional path. FX pressures have abated on the back of CBN initiatives, as we've heard from the central bank governor, and trends of insurgency are largely muted. Our capital market has also recovered. After 3 years of significant socio-political and macroeconomic headwinds and the attendant underperformance of the capital markets, we are witnessing a renaissance of both domestic and foreign participants, investors and issuers alike in our market. Indeed, FTSE and MSCI have removed Nigeria from the Frontier Market Index watch list, which is great news for us. In August, we witnessed a rally that drove the equity market capitalization to over 13 trillion naira, a level not seen since 2013. Indeed, the equity market has soared 43% from a trough of 8.8 trillion naira in March 2017 to current capitalization levels. Equity secondary market liquidity has also shot up as the average daily value traded has risen 95% year to date as at the end of the third quarter. The primary market has also been buzzing. We've seen $1 billion of equity capital raised in follow-on offerings in the market year to date. This compares to just over $100 million in the same period last year. We also welcomed our first airline and non-interest banking financial institution via non-capital raised listings this year, and the drumbeat is swelling towards our next IPO. Notably, this resurgence has not just been an equity story. In the ETF space, we witnessed market capitalization surge 33% in the year to September timeframe, with traded volumes and value up 257% and 24% respectively. We've observed renewed interest and activity from issuers on both index and product creation, just as we look forward to the launch of our flagship index from our collaboration with NSE before year end. In the fixed income space, primary market activity has been strong, with over $4.8 billion raised in local currency bonds. We also welcomed the listing of $1.8 billion of Eurobonds and look forward to listing more sovereign and corporate Eurobonds in the weeks to come. In collaboration with the Nigerian Debt Management Office, and the DG is here, we witnessed the birth of the Federal Government Savings Bond Market, a bespoke instrument structured for retail investors. Since the introduction of the Federal Government Savings Bond in March, we have seen 6.7 billion naira raised from 6,588 retail investors. And this is undoubtedly the largest pool of retail investors participating in the Nigerian bond market. So we're starting from ground zero and trying to build it up. And there's more to come as we anticipate the listing of the first foreign sukuk and green bond, first sovereign sukuk and green bond in the days ahead. Overall, I believe that our market and economy are stronger, more diversified and resilient. Business and investor sentiments on the economy and markets are also increasing positively. This indicates fertile ground for business growth as issuers and investors interact in an environment that encourages ease of doing business. Indeed, the World Economic Forum just released the competitiveness report, the annual report, and Nigeria moved 2 spaces in the positive direction. So I think we have that positive momentum going right now, and we believe that as we continue to enhance our partnerships around the world, most especially with the London Stock Exchange, we'll continue to drive the improvement in business conditions that will facilitate the creation of capital, not only for large entities, but also for small and medium enterprises.
Fantastic to have hear from you and hear the case for the powerful reforms that you're making. And as Mark alluded to, we have a deep and long history working with partners in Nigeria. We're very proud of the 8 Nigerian companies that are listed on our market, including fine names such as Zenith Bank, Seplat, which was a pioneer in terms of creating a dual listing structure between the Nigerian Stock Exchange and the London Stock Exchange, which has served, I believe, the company well and served the market well. We are looking to further deepen our partnership in Nigeria. And I think this morning and during the course of the day, there are many topics that we're going to cover. Supporting entrepreneurs, supporting small and medium-sized enterprises. Yes, we are the most international stock market in the world. We have a market capitalization of around $5 trillion. We have some very large companies on our market, some names mentioned earlier this morning, but actually at the heart of what we do is supporting small and medium-sized enterprises, making sure they get the support they need to be able to access capital and to grow and scale up. And to that end, the Secretary of State for International Development was here earlier. She came here a few months ago to launch Companies to Inspire Africa, which was a partnership report which we produced with CDC, PwC, Citi, Diamond Bank, and a number of others to find the most inspiring small companies in Africa. And we showcased 343 companies here from around 30 countries. The greatest concentration of companies was from Nigeria, 58 Nigerian startups. And
when we come back after the break, we'll look at some developments on the commodities market. Do stay with us.